that consolidation period has gone on since last July. The longer consolidation happens, the stronger the breakout is. This is a mega sized consolidation pattern. So my guess is if you break out above that level, you're going to probably go to the 40s at least on the next move up. And it could be pretty dramatic for those out there that are looking for a big move in silver.
This is Dunnigan Kaiser, founder of Liberty and Finance. I'm now a licensed gold and silver broker for Miles Franklin. Call me directly for the physical gold and silver that you need at the best price with personalized private service from one of the oldest and best companies in the business. For fastest service, just call 1-888-81-LIBERTY. That's 888-81-LIBERTY. And either I or one of my sons and fellow brokers will call you back as soon as we can and understand your needs.
Hey everyone, this is Elijah K. Johnson with Liberty and Finance. And back with us today is Gareth Soloway from InTheMoneyStocks.com. Gareth, thank you so much for joining us today.
Thank you for having me, Elijah. Great to be back.
It's great to have you. Now, I first wanted to talk about the inflation numbers. We just got these out, and they're essentially, for May, the highest inflation rate since 2008. It's 5%. Your take on how we're just seeing inflation skyrocket right now?
Yeah, so it's overall scary. The market's still trying to figure out if it's transitory or not, meaning that will it come down sharply in the second half of the year once the craziness kind of subsides. I think that's why you've seen the equity markets hold up as well as they have, and technology start to take the lead again to the upside, because the market is hopeful that it is transitory. They're trusting in the Fed. In the Fed we trust. That's the market's policy right now. So it certainly, to me, is concerning. I do think you will have a back off of inflation in the second half and into 2022. But my concern is that you're not going to see it come back to the 2% level that the Fed wants it at. I could see it being kind of, sticking around that 3.5%, and maybe even inching up in 2022 as well. So for me, it's a concern. I think you still have to protect yourself in the right places.
And what are some of those places right now? Because it sounds like you're still seeing high inflation going forward.
Yes. So I think, again, you probably stall out 5-6%, and you'll see it back off. And that's going to make the markets think it is transitory. But I do think that it's going to remain elevated above the 2% that the Fed wants, which will then cause them to hike interest rates into 2022. The places to hide continue to be gold. Gold is a great spot. I think last time I was on, we were talking about how when crypto would dip, gold would become in vogue again, and we've seen a great move up in gold. I still think as an inflation hedge, gold is the place to be, other metals as well. So I think that's a place to be. I also like Bitcoin, but it just has to come in enough. We saw a nice crash in Bitcoin down to 30,000. I'm expecting a little bit of a bounce here to continue, but then another wave of selling to get into the 20,000 range, where I would like to accumulate. So the thing is with Bitcoin is it's so volatile that it's hard to make a case that if you buy it, it's a great hedge against inflation right now, because you could be buying it and it could drop 50% on you. If you have a longer term horizon, like 5+ years, then I think you're fine in terms of Bitcoin and other cryptocurrencies.
And what makes you so bullish on Bitcoin and cryptocurrencies? Because it's hard for some people to understand the value in that. It seems kind of like a lottery. We've seen it go up quite a bit, but who knows where it's going to go in the future, because it's hard to understand its fundamental value.
Yeah, and that's very, that's fair to question it, and everyone should question it, and you have to kind of arrive at the understanding of what it is. For me, it's a way to understand that this is a potential storage of security when you have the Federal Reserve printing so much money. The U.S. debt continues to balloon. There's so much of every dollar in taxes people pay that has to go to the interest just on the debt. And as you see countries in history, what they do is they devalue their currencies to pay off their debt. And to me, knowing that Bitcoin will only ever have 21 million coins ever, that gives me confidence that that won't happen as an alternative. Same thing for Ether. Ether, obviously, you can see more and more mining, but it gets harder and harder. So it becomes less of something that'll be printed just willy-nilly like the US dollar. So same thing with gold. Gold, yes, you can mine it, but it takes energy. It takes, money to mine it. So there's a base level price for that as well. So I think that's the key is for me, cryptocurrencies. I mean, listen, Dogecoin, a lot of people are big fans. There's another 10,000 Dogecoins printed every minute. So for me, that doesn't solve the reason why I should be in Dogecoin versus dollars. I mean, it's the same thing. When you go to some of these cryptocurrencies that have a stated maximum run, that's where I start to see the value in diversifying away from US dollars.
So what you're saying is the limit in supply is what kind of gives Bitcoin its uniqueness or its value.
Yes, that's exactly right. So I just put it up against the dollar where the government can basically say, hey, let's borrow another $1 trillion. The Federal Reserve can just come out and say, hey, we'll expand our balance sheet another trillion and press this button on our computer and there's $1 trillion there. That concerns me as someone who makes money and earns a living and knows that every dollar I earn is worth less and less every single year based on inflation. I want to know that there's something I can put my money in where that printing of money of dollars doesn't have an impact. In fact, it should cause Bitcoin to increase over time.
And then your perspective on what has happened with Bitcoin since the last time we talked. So you had been talking about how, Bitcoin could crash and then people will move into precious metals. And that's kind of what we've seen is Bitcoin since we last talked really pulled back again another 20 to 30%. So your perspective on the cryptocurrency sector right now and how it's impacting precious metals.
Yeah, sure. Let's take a look at the chart of Bitcoin here, and that'll give us some great insight. So basically you had this move up in Bitcoin starting, late last year or even earlier last year where you were making higher highs. So high, higher, high, higher, high, higher, high. And same thing with the lows, low, higher low, higher low. That's very bullish price action. What changed for me is where you had this kind of euphoria in the market and so many people got uber bullish on Bitcoin and cryptocurrencies. And then you started to see a lower low and a lower high. So here was your high and lower high, and it created what's known as a head and shoulders pattern, shoulder, head and shoulder. And once that broke, that caused your big decline down to 30,000. We've then seen basically consolidation or digestion of that move. And my guess is you'll float up a little bit more, maybe even back to the 48,000 to 50,000 level before the next wave of selling. And the reason why a lot of people are like, well, what makes you think it's going to sell again and take out 30,000 and go down to 20,000-ish? And the biggest thing that I can point to is that you really haven't seen a real flush out. When you saw the dip to 30,000, you've seen people say, wow, that's crazy. But you don't see people saying, well, is Bitcoin going to survive? Is it, that's what you want to get to, where you have this question in investors' minds where they really just throw the baby out with the bathwater and say, oh, I give up. And that's usually where you see that bottom being put in, especially with institutions becoming more adoptive of the cryptocurrency. So ultimately, I don't think the washout is done yet. And I'm just patiently waiting on a swing trade basis to get in at those levels once we get there. And hopefully, I would think 3 to 6 months is a good time frame. I think over the next few months, you'll move up to that 48, 50,000 level maybe as a high. And then 3 to 6 months out, you should see that next flush.
Do you find it bullish for Bitcoin that El Salvador is actually adopting it as as legal tender?
Yeah, this was kind of an interesting story because everyone, all the Bitcoin bulls were like, oh, this is the biggest news ever, and nothing against El Salvador, but it's not the U.S., it's not the U.K., it's not the European Union, it's not China. So I think it's a step in the right direction. But I don't think it moves the needle in terms of money flow. If you look at where a majority of the money is flowing into Bitcoin, it certainly isn't from El Salvador at this point. If you see bigger countries or more countries doing this, then I think that gets my interest. Like, let's say, even if we see another 10 countries that aren't major adopt it, that would start to make me think, okay, if you get a bunch of these countries to do it together, that becomes a bigger thing to move the needle on Bitcoin.
And now your perspective on gold and silver. We have seen, gold and silver rise really since the beginning of April. We've had a little bit of a pullback ever since gold was testing that 1900 level and silver really that $28 level. But your perspective on where gold and silver stand today.
Yeah, so really good on the charts on gold here. And what you've seen on gold is you've actually had a breakout. So I think the last time we talked, we were down in this range, down about 158 or 157 on the GLD. And what you had was this beautiful move up, and it coincided perfectly with money flowing out of Bitcoin. The top on Bitcoin was basically the bottom on gold. And I remember we talked about, people are selling gold to buy Bitcoin, and now you've seen a reversal of that. I do think because of the volatility in Bitcoin, there will always be a place for gold, at least over the next decade or two. Because there are going to be investors, right, who don't want to weather 50% moves in Bitcoin up or down. They want to be in something that's slower moving. So that's where gold comes in. And you can see the breakout here above this trend line. And now what we're doing is consolidating. I think you'll pull back to this trend line, and then that's your buying opportunity. So on the GLD, 172 to 173. So it's not too far lower than here. But once you retrace, I expect another springboard event that probably takes you up to the all-time highs on gold, which on the GLD were above 190. In silver's kind of still stuck in this mode where you have a trend line under here, and you can see you're just still in the consolidation mode. You haven't broken out yet on silver. For silver to break out, it would basically have to take out the high going back to last year in July, and then this was kind of the Reddit squeeze attempt high as well. So that's the line in the sand I'm watching on silver. I do think silver eventually breaks out. And just like a metal, it's going to gain value as the dilution in the dollar continues. But again, I would say that in the shorter term, I'm more bullish on gold because it has already broken out.
And if we look at that chart right there, it seems like that trend channel is narrowing. So it seems like at some point, maybe within the next year, silver does have to break out one way or the other.
Yeah, that's precisely correct. So wedges are great like that, is that because they're narrowing, eventually they come to a point, and you're 100% right that you'll either break out or it'll fail and break down. My guess is it'll break out to the upside.
Now, a lot of people have been talking about how if it breaks above that $30 level, we could be off to the races. Your expectation for what happens with silver if we break above that trend line?
Yeah, so that consolidation period has gone on since last July. The longer consolidation happens, the stronger the breakout is, right? So if you just get a few day consolidation, it's usually a week breakout. This is a mega sized consolidation pattern. So my guess is if you break out above that level, you're going to probably go to the 40s at least on the next move up. And it could be pretty dramatic for those out there that are looking for a big move in silver. I mean, it actually could coincide with a real squeeze in silver for those funds and institutions that are short.
Now, moving forward here, you've also mentioned how, there's been a move out of cryptos and actually into meme stocks. And we've seen this meme stock thing really since the GameStop Reddit phenomenon. And you've recently mentioned how you're short AMC. Now, your perspective on this whole meme stock phenomenon, especially how it relates to the last few weeks, and why you are short AMC right now.
Yeah, so with that, you're exactly right. So what we've seen is the same investors and traders that have been trading the Bitcoins and the Dogecoins. As soon as those began to fall and correct, you saw this big inflow into the meme stocks over the last 3 weeks or so. And again, that's money rotation. With AMC, I mean, I think the biggest thing to make a point on with AMC, and I'll show the AMC chart here, is that you have to just look. I'm usually a technical guy, and if you're looking at technicals, it's a ridiculous chart as well. But at some point, you also have to look at fundamentals when you're looking at a longer term setup. And if you go back to 2015, let me flip over to the monthly chart here on AMC. All right, so here's your monthly chart. When you were trading at $35 on AMC in 2015 and also in 2016, there were only 100 million shares outstanding. So, you can even make a comparison with the dollar with, there were only this much. This was the supply of dollars 20 years ago, and now they've expanded the money supply by X amount. So now you have over 500 million shares of AMC. So AMC trading at $44, you actually have to multiply that by 5 to get an accurate comparison to where AMC was trading back in 2015 and 2016. So really the real price of AMC and on this chart is $200, basically over $200, which to me is like, if you just think about I just heard again that there's a new, I don't know if it was Disney, but they're releasing one of their new movies in the theaters, but also on their streaming service. And all these streaming services are doing it. And I just look at myself personally, and this is the thing I draw to, is like, I can go to Costco and buy an 80-inch TV or a 100-inch TV for, a few $1,000s now. Do I want to sit in a crowded theater and have someone sneeze behind me? And, it just kind of, it just makes you like, do I want that experience? And not only that, do you want to pay for it? You bring your family, you're talking $50 minimum plus popcorn and drinks and snacks. So for me, it's like, yes, AMC could continue to rally a little bit here, but inevitably it's going to come down as the hype kind of subsides. So to me, it's lunacy, but in the short term, momentum can carry the day, no doubt about it.
And it's interesting because if we look at some of these meme stocks like GameStop, I mean, it's hard to believe. I mean, I haven't looked at the fundamentals of these companies, but it's hard to believe that they're at their fundamental value. It seems like they'd be way above just seeing the move that they've made really exponentially.
Yeah, I mean, they are. There's no fundamental reckoning. With GameStop, I think there's this hope that they're going to reinvent themselves. In terms of AMC, I'm not really sure what they can do to reinvent themselves. Maybe there's some ideas out there, but they have so much debt that they keep on having to dilute their shareholders over and over again. And if they don't continue to do that, they're going to go out of business because they're hemorrhaging so much money and they have so much debt. So AMC definitely should probably be a $5 stock if it's even in business in 5 or 10 years from now. It's smart that they've raised capital. I just worry that the small investor is in the longer term going to be the ones that unfortunately take the hit on that.
And if AMC and maybe some of these other stocks are bubbles, as it seems like you're saying, bubbles can last longer than a lot of people expect. So do you have any time horizon on when you see AMC and maybe some of these other stocks falling?
Oh, that's a good question. I mean, AMC, right, is already off of the $75 or $70 high back to in the 40s. My guess is that high stands for years to come, if forever. When it will get back to sub $10, my guess is it'll coincide when the market turns into a bear market. Once you get a market that people start to get scared, they become much more apt to click the sell button and just say, okay, I got to just exit the market in total or exit my higher risk positions here. So I would look for the market breakdown. And once you get a 10% correction in the equity markets, then you'll see a lot of money, in my opinion, run away from those type of stocks.
Now, some people, I believe, are looking for kind of a correction coming later this year. Do you have a time horizon on that with respect to the general stock market?
Yeah, let me show this chart because I think this is the coolest chart to look at. But basically, there's a trigger point for me. And you can see here on this chart, this is the SPY chart. It's the daily chart. There's a trend line that goes all the way back to March 2020 lows and basically connects and kisses the lows all the way from the 2020 lows to current price. And then there's this top line, and you can see it's a wedge pattern, just like we were talking about on silver as well, that's narrowing. And what I keep on telling people is that once this downslope, this upsloping line here breaks to the downside, that should be the catalyst on a technical basis to really kickstart. My guess is a 10% correction in the markets, maybe more, but I think at a minimum 10%. So if you're watching at home, you're watching this interview, just continue to watch this trend line. Everyone can put it in their chart very, very easily, just connect it through these lows. And when you get priced to trade below there, then I would say, okay, now you expect that sell pressure to come in, and you'll probably go down to about, I would guess 375, 380 on the spiders, which is about a $50 decline from where we currently sit on the SPY, which is just over 10%. That would be kind of the minimum corrective move. It might turn out to be even more than that, considering, margin levels are at all-time highs, euphoria. There's so many signals out there that point to, the same type of things during the dot-com era, the same things in 2017, that I really do think at some point we're going to have to face the music of a huge correction of 50%. But, it's so hard to go on record and just say, yeah, that's what we're going to get this time, considering every dip has been a buying opportunity. So, and also you have to just remember the Fed is waiting there with, trillions of more dollars to flood the system with. So I think 10% is the no-brainer correction move. At some point, we'll get that bigger flush out in the markets.
All right. Well, Gareth Soloway, we really appreciate your time today. If our viewers would like to hear more of these interviews, they can go to libertyandfinance.com. In the left-hand corner, subscribe to our free newsletter so you'll be notified of all the new interviews we're doing. If our viewers would like to find you, Gareth, where can they find you? And any last thoughts you'd like to add?
Yeah, just continue to monitor the markets. Understand the rotation of capital we're seeing between crypto and meme stocks. It's possible when meme stocks start pulling back more, you'll see a rotation back into crypto in the short term. And you can follow me on Twitter at Gareth Soloway. That's the best place to come and find me, or inthemoneystocks.com, my website as well.
Gareth, once again, thank you so much for your time, and God bless.
You too. Thank you so much.
This is Dunnigan Kaiser, founder of Liberty and Finance. I'm now a licensed gold and silver broker for Miles Franklin. Call me directly for the physical gold and silver that you need at the best price with personalized private service from one of the oldest and best companies in the business. 31 years strong, A+ rated by the Better Business Bureau, 0 complaints, licensed and bonded. For physical delivery, vault storage, or precious metals IRAs, excellent prices, privacy, and confidentiality. Pay by check, money order, ACH, bank wire, or Bitcoin. Satisfaction guaranteed. For fastest service, just call 1-888-81-LIBERTY. That's 888-81-LIBERTY. And either I or one of my sons and fellow brokers will call you back as soon as we can and understand your needs.